All right, hello guys, welcome to tonight's training, Learn to Trade workshop. I'm super excited to be here. We already have people trooping into the call, so I'm happy to host you. My name is Adeposi Okupe, and I would like to get some feedback. Let me know if you can hear me and if you can see my screen, see my video. Can you see my screen? Can you see my video? Let's get some feedback in the chat before we go. All right, awesome. You're welcome. Okay, so as we go ahead, I would like to encourage you guys to switch off your other devices. If you have other devices that may distract you, whether it's a laptop, whether it's a television, another device, a mobile phone with you, make sure you turn those things off or put them on do not disturb so that they don't distract you from the training tonight. All right, what you're going to learn tonight will change your life and your finances if you allow it to. Okay, and that's not marketing cliche. Just stay with me for the next 90 minutes, 1 hour 30 minutes, and you will understand exactly why I said that. Okay, so don't post your phone number or email address in the chat. We have your details, you have our details. So if you need to reach out to us, you can reach out to us on WhatsApp or email, and then we can also reach out to you afterwards. So this webinar will be interactive. So I will ask you questions during the webinar, and I would like you to answer me. I want it to be interactive. I like to feel the vibe of the room so that I can know if we are together. Okay, and also what I'm teaching you today is not a presentation. This is a practical workshop. All right, so that's why I sent you the emails with the pre-workshop setup instructions, how to set up your chart, how to set up, the indicators that we use and the correct account for what we're about to show you. So if you did not do that, because I'm sure most people will not have done that, you can go back to your email after the training for the link to set up your account properly. And the last thing is I want to know where you guys are from. So Peter Vito Sheji, did I get that correct? Is from Badagry. Please type in your city and let me know where you are joining us from. If you are from Lagos, if you are in Oyo, Ogun State. Okay, Odusholo is from Ogun State. Samson is in Magodo Phase 2. Temitokpe from Abuja. All right, who else do we have? Precious from Ibadan. Okay, Ifoma from Lagos. Awesome. Okay, thanks, guys. So let's go ahead and get into the training. So who is this course for? Number one, professionals that have no time to trade. If you are, when I say professional, I mean you have an occupation. Either you are working class, an accountant, engineer, whatever, business advisor, financial analyst, banker, wherever you are working, or even a civil servant, right, or a consultant, but you understand the power of Forex, but you've not been able to find the time. Is there anybody like that? You know that this thing can work, but or maybe you even know how to trade, but you just don't have the time. You can't create that time because of your busy schedule. Okay, Tomitope says that's me. Or if you are a frustrated trader, you've been trying to make it work, but it's just not working. You always find out you are blowing accounts, you are making losing trades, you are, just going around in circles, basically. Or if you have lost trust in the industry and, you're just wondering if this thing can really work. Okay, what does this guy have to say? All right, this course is for you. And if you're looking for a sustainable strategy to build wealth, many people come to Forex to hammer. But if you are here looking for something beyond making money, maybe you are already making good money from your job, your business, but you're looking for how to build wealth by trading and managing your money. That's what really gets me going. I'm going to show you how you can do that on this call. All right, so make sure you stay to the end. For all those who attend at least 70% of this training, you are going to get a certificate of participation from FBS. FBS is the partner broker, and I'm partnered with them. So you're going to get that in your email once you're able to at least attend 70%, which is roughly about an hour or thereabout from this course. So that's also important for you to know. So the question basically is, who will guide you? There are lots of scammers, maybe not only scammers, they're actually well-meaning, well-intending people with good intentions out there teaching Forex, but you need somebody that can actually help direct you to your goal. I'm not here to teach you another Forex strategy. I'm trying to teach you how to solve the money problem with Forex. All right. And as I said, I'm Adeposi Okupe. I'm the founder of the Personal Wealth Academy, and that's precisely what I teach people in that academy: how to collapse time frames and become financially independent in like 3 to 5 years. I'm also the founder of No Limits Markets, the platform that is presenting this training to you. And why should you listen to me? They call me the Wealth Crusader. I've been on this journey obsessing about this, cracking the code to wealth for the last 10 to 15 years. Over 10 years of trading experience, and I'm a personal finance coach, business expert, and I've trained over 50,000 people, and that's not marketing gimmick. I've actually trained practically over 50,000 people across many cities in Africa and beyond in terms of personal finance, business, and wealth creation. All right, so what you need to build wealth is the right plan, the right platform, and the right psychology. I'm going to show you the right plan. I've already given you the videos to open an account on the right platform. You need a reliable platform. Many of you are trading correctly, your strategy is right, but you are doing it with the wrong platform, and that's what's screwing you over. And then thirdly, you need the right psychology. So I'm going to show you how we achieve these three things today. And before we go ahead, I want you to type in the chat box. Everybody type this: no one is smarter than me. I want you to type that. I want you to confess that. If I say it out loud where you are, so that it sinks in your mind. No one is smarter than me. I can't manage your money better than you can. All right. I may manage my money better than you can, but I can't manage your money better than you can. What's missing is just a little bit of information that you are going to get within the next 90 minutes. All right. And then focused discipline and consistency in one direction, and you will get to your goals as fast as possible. Okay. All right. So let's go into it. This is what you are really up against. Okay. The big institutions, they are out there profiting from your money. They charge you outrageous fees. Let's say you are investing, you're putting money in your bank. They charge you fees. You are investing in mutual funds. They charge you serious fees and give you peanuts as interest. All right. The government then taxes you on that, your small profit from your investment or from your business or from your job. And then, they're not giving you the infrastructure, the amenity. We all know these things, right? So it basically leaves you worse off. To add insult to injury, we now have inflation over 30% on paper, but we know on the ground is over 100%. Fuel, is over 300%. Dollar is over 300%. So really and truly, it looks like the Naira, the economy is rubbishing all your efforts, and you think you are going forward, but you are actually going backwards. All right. Can anybody relate to this? So after this training, you will stop blowing accounts. In fact, if you blow another account after this training, you deserve to be flogged. and I'm saying that with all sense of responsibility. Tonight, you will learn how to never blow an account again. All right, except you just want to dash them money. Okay, you will learn to hedge trade like the institutions. You will learn to turn around losing trades into profit. If you've made a mistake and the trade is going against you, how can you turn that trade into profit without stress? How can you trade profitably in 10 to 15 minutes a day? I'm going to show you practically how we're going to do that. And then how can you trade your way to freedom, financial freedom, in 3 to 5 years? If you are in Nigeria or a Nigerian, or maybe in the global south, your opportunities for wealth creation are very, very limited. They are slim to none. But with trading, you can actually become financially free in 3 to 5 years if you do it in a particular way. All right. So at the end of this training, you will become a smart money manager, a confident trader. You will be able to provide for your family with certainty, or yourself if you're not married, and just become an all-round success. There's some of you that have ideas, you want to fund it, but how do you get capital? That's one of the things that drew me to trading. I'm an architect by training. I still practice. I'm into real estate, but I can't go and get a loan. It doesn't make any sense. I have a lot of colleagues who are in serious debts, running to billions, because they went to get a loan from the bank to do a property, dollar killed them, blah, blah, blah. But with Forex, you can see what's happening here. Some of my students are doing 10% per month. This guy posted on our YouTube saying your strategy is working perfectly. It is the strategy that I've been looking for years. It works in both bull and bear markets. Some strategies only work in bull markets. Some strategies only work in trending markets. We're looking for an all-weather strategy. And the icing on the cake is that it won't take your time. All right, you can see this person here, he funded his account with $1,000. So you can see the net profit is 33%, and the duration is 90 days. You can see last 90 days. So this person actually made 10% per month. And these are actual screenshots from our Discord and from the client accounts. And this is somebody else too doing about 13.6%. What would happen if you could do 13.6% or even 10% per month on your account consistently, and you are sure that you will not blow that account, and you will keep growing it and compounding that money for the next 5 years? I'm going to show you what that looks like at the end of this webinar, so stick around. So the golden question is, are you trading or gambling? If you're honest with yourself, many of us are actually gambling. When you push that buy button or that sell button, what happens in your mind? Do you start having high blood pressure, palpitations? All right, then you are gambling. Okay, if you are unsettled because you are in a trade, or you are not even sure what's going to happen if this trade goes against you, or if you win, you are gambling. You are hoping for it to go in your favor. But if you are doing that, you cannot create these kinds of results. These are my independently audited results. This is my account. This is on FX Blue. FX Blue is like my FX book. They are statistics websites. You plug your trading account to them, and then they give you the statistics of your trading. They log every trade. They give you charts and statistics. So this is my main account here, account 1. This is my personal account, which I'm going to show you on this webinar, so don't worry. But I want you to pay attention. In the last 398 days, this is way over 400 days now. This is like 2 or 3 weeks screenshot. In the last 398 days or 400 days, I've done over 360%. Just let that sink for a moment. Is there anything you are doing right now that can give you 12% per month consistently, and that you are in 100% control of? That's the power of what I'm about to show you guys. Okay, so this is another account of mine. This account is a more high risk account. It doesn't have as much money as this one. This is my main trading account, but you can see that I'm doing 16% here. I do a lot more risky experiments. I experiment and I teach you guys on this one. But you see, over the last 350 days, right about, so I started this challenge last year, July, and I'm still on that challenge now, to grow my account from less than $500 to $500,000. I want to show you guys that it is possible. So it's a new account I started. Who would like to do this, by the way? If you would like to do this, say yes. Say me. I started this July last year, so it's about 14 months or 13 months, something like that. Maybe 14 months now. Okay, and that's what you can do. I'm going to show you how to do it. So expect jam-packed value. Expect expect life-changing information. At the end of this training, I would invite you guys to join my inner circle. It's not compulsory, but for those of you who are really serious about this, I'm only looking for 100 people. I think I'm about 40 something now. Once I get to 100, I'm going to close that group. Okay, I just want to get success stories. We have done this in other countries. South Africa, in Africa mainly, but we want to create Nigerian success stories. So this is a Nigeria focused program, and you will see why I said so. So get a notebook and a pen to write things down. So Forex is not simple. Forex is not easy, but it's very simple. And the reason is because of risk. Many of you don't understand risk, and you don't understand your emotions. And that's why you are losing. Even though you have the best strategy, if you don't have the correct psychology, you will blow your account. So risk comes from not knowing what you are doing. If you know exactly where the price is going, your mind will be at rest, even though you have fluctuations. If you know for certain that this price is going up, if the price dribbles and goes down first, then you will still be at peace, because you know that it's just going down to take out some people's stop loss and then it's going to go back. The problem is if your stop loss is part of the if you are part of the people that we are taking your stop loss before we go up, if you are trading against the institutions, then you are at risk. But if you know exactly what is happening in the markets, the game that the banks and the hedge funds are playing, then why not just play on their side? That's why I decided to ditch retail trading concepts. I'm not here to teach you guys about Bollinger Bands and stochastics and all that. They are not bad, but they are retail concepts. I want to show you how to spot what the institutions are doing and just follow them. Just latch on to their back and ride the market wherever those guys are taking it to, because they are the ones that move the market. All right. And trading can be very lonely, and that's why I invite you guys to join my Discord group. If you have not joined the Discord group, the links are all there in your email. I'll post it again in the chat, so you can go ahead and join the Discord. Also join my Telegram. My Telegram is where I'm logging my trades going from $500 to 500,000. So you will see everything, the mistakes, the wins, the losses, the growth of the account. I'm logging all that on that Telegram channel. So make sure you follow that and make sure you join the Discord, because that's where you can chat with me and get the community support. All right. So here's the first principle I'm going to teach you tonight. Timing is everything. If you want to trade in 10 minutes a day, if you want to trade without stress, if you want to trade around your busy schedule, timing is the most critical factor. If you are so busy, you cannot trade on a 15-minute chart. You don't have the time to sit down in front of the chart and be monitoring the price. You have to move up the time frames. So I trade on the 4-hour time frame. All right. And in the 4-hour time frame, how many candles do you have in 24 hours? How many 4-hour candles do you have in 24 hours? You only have 6. All right. There are 6 4-hour candles in a 24-hour day. So that means you only need to check your phone 6 times. That's even if you check it in the midnight or overnight. Can you see how that reduces the stress? Well, how can you trade on the 4-hour? So what you do is you set your alarm. You have to know when the next candle is going to open. So let's go to Zoom so I can show you guys my phone. Okay, let's do this. I hope you guys are getting value already. Okay, so let's share my screen. Screen sharing. There and there. All right. So let's go to my MetaTrader 4. Okay, so check this out. This is a 4-hour chart. You can see at the top here. And let me just move my cursor here. You can see here was 10th of October. So this was 1 a.m. this morning. This white candle was 1 a.m. this morning. The next candle is what? It's 5 a.m. That is 4-hour difference. Okay. The next candle 9 a.m. So 1 a.m., 5 a.m., 9 a.m. That's for 4 hours. If you take it 6 candles, 1, 2, 3, 4, 5. The next candle here is going to be 1 a.m. It's going to be back to the same 1 a.m. that we started counting. So that's a whole day, 6 candles. And guess what? What I do is that I set an alarm. So if I show you my phone, I set my alarm. Check this out. 6:59. So new 4-hour candle. I have another one, 10:59, new 4-hour candle. Can you see that? And then I have 2:59. So this one I switch this off because I had a meeting. 2:59. So I have an alarm for every 4 hours. Every 4 hours. And once it happens, once I see the alarm, guess what I do? I took a screenshot today. I was showing guys in my this is the screenshot of how my alarm shows up in the morning. Once that screenshot comes up, I go to my MT4, I look at my chart. In less than 10 seconds, I know exactly what to do. I know if I've seen my entry or exit conditions. And if I've seen an entry condition, guess what? In fact, we just saw one. I missed one on this second candle here. I will just buy. That's it. I'll buy. If I see my exit condition, I exit my trade and then I close and I go back to my work. Less than 15 minutes a day, anybody can do this. Okay, now the next thing that you have to do is to journal. You know, this is my Forex trading journal. It's personal to me, but you can say I put it in a leather book because I'm making serious money. This is serious money. If you do not journal, you are not going to learn. And many of you will not take this serious. Many of you who are already my students, you are still not taking this serious. You are only elongating your journey in the wilderness. What do you journal? When you take a trade, when you buy, you journal. I bought at so price, lot size. You write down the date and the time. Then you write down why you bought. What was the entry condition? There has to be a reason. This is one of the things that will make you guys stop blowing your accounts because you see that the price is going up and you just buy. If that's the reason you buy, then write it down. I bought because price is going up. I think I should quickly enter and come out. So that when you lose that trade or when that trade blows your account, you know exactly not to do that kind of stupid trade again. But if you don't log it, you have nothing to reference. So apart from writing why you entered, you also need to write how you felt. This is equally important. Your emotions. How did you feel when you entered that trade? So you have to enter the trade details, your entry conditions or exit conditions, and then your emotions, how you felt. Very important. You are not a robot. You cannot trade without emotions. You are a human. So write down your emotions. Did you feel greedy? Did you feel smart? Like, let me quickly come out. Did you feel anxious? Did you feel scared? What is the feeling? Are you feeling confident, overconfident that this thing, sure banker, is going to work? Write it down because you are going to refer back to that. And if you win, you will refer back to it. If you lose, you're going to refer back to it. And that's how you really grow. These things form the foundation of successful, profitable trading. If you are not doing them, you go and repent, basically. Go and repent. Okay. So I'm going to show you guys 4 concepts that we put together to achieve this institutional trading. All right. The first concept is called hedge trading. Are you guys with me? If you're with me, type I'm with you. Type I'm with you. Type I'm with you. I'm going to rush through these 4 concepts because we don't have a lot of time. But I told you guys that what I'm teaching you is actually paid content. What I'm teaching you is not a presentation. It's paid content that I teach my inner circle members. So that's why I don't even like recording this live stream. So please pay attention. If you are hedge trading, so what is hedge trading? You know what a hedge means? Hedge, right? Some of you may think about maybe your tire is flat and you want to jack up the tire. You put something called a wedge. So that's a wedge. That's not what I'm talking about. But a wedge also stops, a negative thing from happening. So it's the same thing with hedge. If you think that we are going up and we start going down, you can hedge. Hedge is like an insurance so that you don't accumulate loss. All right. But how does that play out in trading? First of all, no more losing trades. I do not use a stop loss. My traders do not use a stop loss. I can't remember the last time I used a stop loss, and I've not blown an account since God knows when. So it is just because that's how you learn to trade. It's a retail concept. That's why you are bent on using a stop loss. I don't have to. When you use a stop loss, you guarantee that you lose that money. You are telling the market, you are telling the institutions. It's so funny. You are telling the banks that, hey guys, I put my $100 risk. This is where I put it. And they know, I know where you put your stop loss. You know, below the previous swing low, if you are an existing trader. Do you think the banks don't know? The banks are the ones moving the market. So they go down there, they take your money, and then they now move the market back to where they originally wanted to go. So you got your direction right, but you give them free pizza. So we don't use stop losses. We don't use take profits. Why would you take 20 pips, 30 pips when the market is going 50 pips, 100, 200, sometimes 500 pips? I've made 550 pips in a trade. That's about like the highest trade I've made, 550 pips in one trade. But on average, I make 200 to 300 pips on average on one trade. So why would you stop at 20 pips? Because you are rushing, because you don't have time to look at it, because you don't know what you're doing. You think it will reverse against you. You don't know where the market is going. You don't know how to read a chart. You don't know what the banks are going to do. But if you know, then it changes everything. So hedge trading makes you more confident so you can trade predictably and you can depend on it. Let me go over to my trading view and show you guys something about hedge trading. So this is an example that I usually like to give, and let's just start all over again. So normally what somebody would have done, what you would have done is, oh, let's say you came into the market. Let me move this somewhere here. Let's say you came to the market somewhere here, right? And you said, oh, the market is going up. So this is what you call a swing high, a previous high, right? Let me move it to the middle so you guys can see it properly. So this is what you call a swing high. And they're like, all right, if this thing breaks out of here, you know, this is 4 hours. And what you guys do is that once this thing breaks out here, you go into the 15-minute time frame, the lower time frame, and then you put your buy. Is that not what you do? But guess what happens? The thing goes up, fakes you like it wants to go up. So let's say you buy here. Sorry guys, I'm having a cold, so if you are hearing that thing, it's I'm sorry about that. So you buy on this green candle, which is your breakout. You put your stop where? Below previous low, something like that. All right, and then you say you are doing what? Even if you are doing 1-to-1, this is 1-to-1, but I'm sure some of you are doing maybe 1-to-2, something like that. All right. So you see what the price did. So you bought, the price came up here and then it crashed down to take out your stop loss and actually started going down. Many of you would have been doing this. Let me increase it, maybe to go back. Let me increase it, maybe to go back. Please don't do that. In fact, cancel the stop loss. We don't need a stop loss. You do need to know your risk. If this is where your risk is, the amount of money you are willing to risk, no problem. Instead of doing a stop loss, why not put a pending order to go short right there? So remove this stop loss and just put where you would have put your stop loss, just put a pending order, a pending sell order. So it's going to be a sell stop. For those of you that know pending orders, you do a sell stop. And we're not putting a take profit or anything. But the idea is once this trade goes negative and it clicks here, then this one is going to start going positive. You're going to have an open drawdown. Your stop loss, maybe your stop loss was $20. You're going to have a $20 drawdown, but you've not lost the money. It's just an open, unrealized loss. We are going to come back and turn that around to end up in profit. But if you use a stop loss, you have guaranteed that you lose that money. Are you guys getting what I'm saying? So I'm only teaching you what hedging is. Hedging means that if the market decides to go down, you follow the trend to go down. In this small scenario here, do you know what could have happened? Let me just give you an instance. I'm not using a stop loss, so I could say, all right, this market is going down. I'm going to sell. I think I should have entered here. This was my, sorry, let me do it properly. This was the entry. That was where my stop loss was. So it have entered right there. So this is what you would have done. You would have entered the sell right here. The sell came down, started coming back up, following our entry procedures. You know, let's even say you didn't make too much money, but you would have come out once you realize that we are now going back up. You would have closed this your sell in a little bit of profit. Your sell will have been closed somewhere here, somewhere on this candle. And then the market came back up the way to your buy, break even. So you would have made small money here, and then you would have closed your buy at break even. You come out free. Are you seeing that? So that's the idea of hedging, that you hedge while it's going against you, but when it's turning back, you can release your hedge trade, and then you can actually come out in profit. All right, I'm going to show you a practical example. This is just an analogy. All right, so let's go back. So that's hedge trading. Yes. Anna says you are the first mentor to say we do not. You actually don't need it if you know what you're doing. It's more like a protective measure, but it's basically, again, because you don't know, and because you are trading retail concepts. That's what I'm saying. I don't know a bank that will use a stop loss. Maybe they're putting a trade of $2 million and then they put a stop loss of $500,000. Like, I don't know, but they are the ones moving the market. So the second concept is dollar cost average. Do we understand hedging? Okay, let me show you one more thing in hedging. Let's go to my Zoom. I want to show you a trade, a live trade on my Zoom. And that's why I said you have to use the proper trading account. It's not all trading accounts that you can do hedge trading. Some will not even allow you. It is outright illegal in some places. You need the right broker to be able to do that. And not just the right broker, the right type of account. So look at this. All these are real accounts, by the way. I do not use demo accounts. So if you're going to learn with me, you need to be serious. You need to know what you want. And we're not gambling, but I do not use demo. Okay, these are all real accounts. You can see it at the top here. But I want to show you something. This is hedge trading. So I bought this. You can see this buy. You can see this 295. You can see the sell. What's that? 296. So what happened was that where's my chart? Okay. So what happened was that I entered a trade. This was like several weeks ago. Let me see where that trade is. Okay. Okay. So this is one. So you can see this trade. So I entered the trade. That's the trade line buy. Obviously, this was on a very small time frame, just for example's sake. So I was saying that maybe the market was going up. Let me see if I can find it. The market was supposed to go up, but then it went down, right? So when the market went down, what did we do? We entered a hedge. So that's it. It was somewhere here that we were doing it. So I entered a buy here. It went up and then it crashed. And then I entered a sell right here. Now, the difference between this buy and sell, that's what I call drawdown. Is the negative 1 point something dollars you're seeing. But guess what? It's going to remain $1.8 forever because If the market goes down, my buy will be negative, but the sell will be positive. If the market goes up, my buy will be positive, but my sell will be negative. The secret is that your hedge trade must be the exact same lot size. If your buy is 0.01, your hedge sell trade must be 0.01. It can't be less. It can't be more. Otherwise, you will not be in equilibrium. Okay? So that's the secret to hedging. Oh, someone says you're not. Oh, sorry. Sorry about that. I was trying to show you my Zoom on my phone. Okay. So this is what I was trying to show you. Oh, there's a bit of a lag. There's a bit of a lag. Okay. So this is what I was trying to show you. The buy is 0.01 and the sell 0.01. It must be the exact same lot size. All right. So that you are actually in equilibrium. But you're going to have an open drawdown, which will be there forever. It will not increase. It's just maybe cents that are, these are decimals. But it's actually like $1.7 or $1.8. It's going to be there. So no matter how high the market goes, your drawdown will be the same. No matter how low the market goes, your drawdown will be the same. It's now left for you to have the wisdom of how to close out that entire sequence in profit. Okay, so don't worry, I'm going to show you guys a very clear example that will bring this home. These are just explanations. Let me explain the second concept: dollar cost averaging. Dollar cost averaging is a strategy to manage price risk. So instead of purchasing at a single price point, with dollar cost averaging, you buy in smaller amounts at regular intervals, regardless of price. So many of you already know dollar cost averaging, but let me explain dollar cost averaging using my trading view. And I'm going to go to I'll go to a monthly chart. So let's assume you wanted to buy gold. I trade gold, right? And I teach the concept I'm teaching. I teach you guys to do it on gold. Okay. In short, I have a better way of explaining this here. Don't worry. I have a better way of explaining this here. Okay. So instead of, let's say you have $10,000 to buy gold, instead of taking the entire $10,000 and buying it at once, you know what will happen? If the price goes down after you buy it, then you kick yourself that I should have waited. So you are trying to insure yourself against price fluctuation when you are investing. It's an investing principle that we are now bringing into trading. But this is how the big institutions trade. So this is an example. Let's assume we are expecting higher prices because gold is designed to go up. It is destined to increase in value over time because it's limited, just like Bitcoin is limited. All right, those are some of the things that sure banker in the next 5 years is going to be higher in price than now. So, but what do? Instead of throwing all your money in at once, you say, okay, you know what? Maybe I want to buy gold. Maybe in month 1 you buy. In month 2, you just put your $10,000 and you split it into 10. I'll buy over 10 months. So I'll buy $1,000 in month 1. Regardless of what the price is, I'm going to buy at a fixed time every month with the same amount. That's what DCA is. So you buy here in month 2, the price went up. You bought the same $1,000. In month 3, the price crashed. And when the price crashed, this your entry and your entry here are negative. Can you see that? Because the price is under. It's in red, but you bought again. In month 4, it further went down, you bought again. In month 5, your first 5 entry points are in red. They're under the water. At this point, many people are telling you, just cut your loss and move forward. They're telling you, I beg, half bread is better than none. Half a loaf, what they call that thing? Half a loaf of bread is better than none, or something like that. At all, I ain't bad pass. I beg, sell everything and move on. But if you are dollar cost averaging, you know, for example, that the price is going to go up over time. So what you do in the 6th month, you buy again, regardless of the price. In the 7th month, you buy. In the 8th month, you buy. But you can see that the price is inching higher over time. In the 9th month, your trade 3, 4, 5, 6, 7, 8, 9 are all in profit. Can you see that? Your first 2 trades or entries are still negative, but they're not as bad as when the price came down. They are still negative, but you see all these 5 trades or 6 trades have made you more money than these 2 trades. But you're still investing. Month 10, the price goes up. At the end of month 10, all your trades are in profit. And you can see what happened if you kept investing. All your trades, and then you close out all your trades somewhere in future. That's dollar cost averaging. That's very clear. All right. Does that make sense to you guys? So when you see price going below your price, don't panic. Leave the trade in negative. And many of you cannot do that now. You will blow your account. But I want to show you that's why we are teaching you how to hedge. The hedging is only helping you to preserve the account while you undergo all that downward or negative drawdown. And then when the market starts going back up, you join the trend again, and then you come out and close the sequence. So we're not looking at one single trades. We're going to look at a sequence of trades that we end up closing in a loss, closing in a profit at the end of the day. Okay, so some of you may have seen, I'm going to be getting some questions now that, okay, what of the drawdown? Oh, I can't hedge with my account. I can't dollar. You need a big, some of you think you need a big account to dollar cost average. If I'm doing $10, how much is in my account? You know, that's why you need to open the right type of account. I'm going to show you, some of you cannot even dollar cost average because of your broker. Your broker is going to kill you with swap fees, some of you. Swap fees are the fees that are charged for holding a trade overnight. If you hold a trade past 12 midnight, most brokers will charge you a swap fee. It's a carryover fee. All right, so you have to actually be on the right type of broker that will allow you to dollar cost average without charging you. Look at my MT4. Can you see what they call swap here? 0. See taxes? 0. See charges? 0. Most of you on this call, they charge you charges, commissions on your trades. They charge you swap fees for keeping a trade overnight. That's why you're in a hurry to close the trade. Can you look over here? No stop loss, no take profit. Let me show you my main account. Now that I've explained dollar cost averaging, I'm a bit confident that you won't faint when you see my account. So let's go to my main account. Okay. By the way, this should be... Okay, so let's look here. So this is my main account. All right. And you can see, you can see the drawdown. You can see the drawdown. This is the open drawdown on the account. Just calm down. Okay, calm down. But you can see the value here. This is the balance on the account. This is the drawdown. And then someone is like, what is all this sea of red trades? Sea of red. What's going on here? Has anybody ever seen an account like this? Has anybody seen an account like this? We just read. Everything is just red. But you have wisdom now. It's dollar cost. It's not all the trades that are red, actually. Some are blue, some are blue, but this is what happens when the trend is just correcting. Okay, so just check this out. Let's assume I was buying here. Buy, and I'm dollar cost averaging. But at some point, it's now coming back. Let me show you something. If it won't confuse you, especially those of you that are new. Can you see? Can you see buys? What is this? Buy. By the way, this is more advanced. Your chart will not be as busy as this. Okay, so but I'm just showing you dollar cost averaging. I'm showing you. Can you see they're all buys? Guess what is going on? Now that the trend is going back up, you can see some of the trades are coming blue. But I'm not rushing to close them because there's a plan. When we combine hedge trading and dollar cost averaging, we have a unique trading plan that some of you, your mind will be blown when you see how this works. Okay, so I just wanted to show you guys, you have to be comfortable with drawdown, and your focus cannot be on this P&L. That's why most of you are struggling. You are always looking at this screen. Am I still showing? Okay, you are always looking here. Your focus should not be here. Your focus should be here on this chart. Many of my students already know what happened right here. They already know that all your sell hedge trades, you would have closed it right here, because our entry condition for going long has been met. So I'm just waiting for my buys to come into profit all the way up to the top, and then I close it. Okay, but you are so focused here that you can't even think. You can't think that, hey, how can I come out of this and close out eventually in profit? We're not talking about closing a sequence in profit, not just one trade. And then you see that in a week, I may make, check this. This is what is important. Can you see profit? Can you see the profit for the last month, 1 month? Can you see the profit? 20,000. By the way, this is cents. This is not dollars. I know some of you are still like, so we're like, what am I looking at here? So this is not dollars. This is cents. So I showed you guys how to open a cent account. A cent account means this money is showing as 20,748 cents. So if we take the decimal places, a point, two points behind, it will give you $207. It means that this account actually has what? It has $3,147. So this account, I started this account with less than $500. Actually, it was about $100 started with, but I was adding a little bit of money in the first month, So, but this is where you should be looking at. You should be focused on this. Can you see this screen? This is the opposite of what you are seeing in the other side. This is my history. This is money in the bank. This is money in the bank. All this you are seeing is money in the bank. Can you see? Sometimes I'm impatient. You can see all those red. Sometimes I'm impatient. I don't want to wait for all the trades, just like I showed you. Maybe trade 1. The market has not hit trade 1, but trade 2 to trade 10 are already in profit. I just close the entire sequence. I beg, I dash them down. It's my choice. If I want to, I will leave it there. Eventually, it will come in profit. Because gold can never go to zero. The market can never. If you see a currency chart, it either goes up or down. If it goes down, it will come back. Why are you in a hurry to close and give them the money? It will still come back. The problem is you cannot hold your account pending the time that it comes back to blow. So I've shown you now. Hedging is the secret. There is no pressure. Can you see all these trades? Look at the time here. I don't know if you guys can zoom in. Let me zoom in on my phone. I want you to see the date. Can I say it? This is 10th of October. This is 12th of October 2023. So actually exactly a year ago, just off by 2 days. And guess what? Can you see any taxes? No tax, no swap, no charge. Can you see that? Can you see no stop loss, no take profit? All the trades are like that. I have no taxes, no swap, no stop loss, no take profit. It just liberates you. Calculating up and down, it just liberates you. And then you can look at here. I do not look at this screen for anything. There's nothing I want to look at on this screen. It's of no value to me. This is where I focus on. All right. And I close the trades based on my trading plan. I believe this is very clear. Let's get back into someone says almost read. So you know where you guys get confused is you don't understand what a drawdown is, and because you don't know how to come out of it, you begin to panic. So this is what we call unrealized loss. That's what I was explaining. Don't focus on this. You are in business. You need to treat your trading like a business. Okay? If this wasn't working, I wouldn't be here today showing you. You need to treat your trading like a business. And don't be scared of operational expense. This is like your operating capital. But you're going to get it back anyway. I will give you an example that will bring this home for you. Does anybody here know ShopRite? Let's give you an example of a shopping mall. If ShopRite comes to Ikeja, they open a store in Ikeja City Mall. They spend 100 million to lease that store maybe for 5 years. They spend and 100 million to lease the store and to stock the shop for the first year. 100 million. If they don't put down the money to rent and to stock it, there's no business. You see, that money they use to rent the shop and stock the shop is what we call drawdown. Is what they call operating expense or operating capital. They need the money to be out there at risk, so to speak, in quotes, so that they can do the business. Is anybody following me? If you are following me, say yes. Type yes, so I know you're following. When you start to think like a business, then you understand that your drawdown in your trading, when you are hedge trading and dollar cost average trading, your drawdown is your operating capital. You are going to make the money back with profit. You just have to be patient. Some of you are not in a position to be patient with your trading. And that's why I don't like telling people that they can make money with Forex. Forex is not for making money. Forex is for growing wealth. Forex is for patient people that are not looking for what they will eat tomorrow. They have a job, they have a business, and those are the people I'm trying to help here. If you don't have a job, you will pressure your account. You will be in a hurry. If you don't have a job and you save $100, 10% per month is going to be, what's 10%? $10 a month. What do you want to do with that? You will not be patient enough to allow that money compound. So I teach people, focus on your job. Keep your job. Don't quit yet. Grow your business, and then the excess cash flow, put it in this account. There's no way you want to put your savings now in Nigeria that's going to yield you anything beyond 20%. Even with the new interest rate, the max you can get is 21% thereabout. Maybe fixed deposit or something like that. But with this, you can make 360% on your money in a year. That's the only thing. I don't know what else makes sense now in Nigeria for the Nigerian. All right, so I've spent a lot of time explaining dollar cost average, but this is the question: when ShopRite makes, they spend 100 million to stock the shop, when they make 5 million naira in the first month, I want you guys to answer now: is the 5 million naira profit, What is that? Would you consider the 5 million as profit? You know, all the shopping that you people came to do in ShopRite, they spend 100 million, but they've made 5 million. Is it profit? Temitope says not yet. And Anna says no. So what is it? Is it loss? What is it? It's not loss. They made the money. I don't know, but they made the money. It's revenue, right? It's sales. It's income. It's income. It's revenue, correct? That's the exact way that you need to look at your trading account. Because guess what ShopRite is going to do? They are focused on growing the business. So that 5 million, they're going to take 90% of that 5 million and go and restock the shop. Have you sat down to think about that? All the sales they made in a month or in a quarter, they will take that money because the shop cannot be empty. You need to put something down on the line. So that's drawdown. You must be comfortable with drawdown if you want to grow. You must be comfortable with having skin in the game if you want to build wealth. And that is the drawdown that you are seeing on that account. But because you know how to manage it, you know how to hedge, and you are using the correct, appropriate account for DCA and hedging on the right platform, and with the right psychology, you are not looking to hammer tomorrow. This account is my freedom account, is my wealth account. It's going to $500,000 in 5 years. At that time, I can take out 20%, $100,000, and go and do something massive with it. Can you see that? Are you getting the picture now? Let's go ahead. I want to show you guys a great example. So I talked about the platform. Why do I choose FBS? I started trading in 2005, so it's going to about 18 years now, or 19 years. That was my first introduction to trading, 2005. There was nothing like mobile app, MT4 mobile app. What was that? In fact, to fund your account, you have to go and buy dollars first, open domiciliary account, go to the bank and pay it was crazy. Then you wait, you wait for like a week or so, 2 weeks, I can't remember, for the thing to reflect in your account. But now, some of you are angry that you press withdraw and the thing did not land in 2 minutes. You know, times have changed. So I've been around the block for a long time. And if you are going to learn with me, if you want me to mentor you, you have to be on FBS. Not because they are I can't say they are the best broker in the world, but they are definitely up there. But they are the most reliable broker that I know. And that's what I need when I'm trying to grow wealth. I need somewhere that I know my money is safe and that, you know, they are not going to screw me over. FBS is an A-book broker. A-book broker means they don't have a trading desk. Most other brokers that you guys are using, they trade against you. They have a trading desk, a trading office floor in their company they are also placing trades, and they are seeing your own trades. They are the ones hunting your stop loss. So A-book brokers do not trade. They only make money from the spread. And I'm okay with that. It's the cost of doing business. Think like a businessman. There is no conflict of interest. So they are used by over 28 million traders, 14 years in the industry. They are regulated by the FSCA, that's Financial Services Conduct Authority in Belize. That's where the headquarters is. So they are regulated in about 4 major financial centers around the world. So nothing can go wrong with your account, and they'll be hearing stories. They have a license. So if you shout that, I will report, they will refund your money. But I have management access, and I'm saying top management access with FBS, like globally. So there's nothing that can go wrong with your account. If you spot something that went wrong, maybe a glitch or something, you just need a screenshot and an explanation. I will give you the email to send it. You copy me, and it will be reversed in a couple of minutes. I've done that for a couple of clients. So that's the assurance that I need when I'm trying to build wealth. I'm trying to grow this into $500,000, not $50. I need to know that my money is safe. And then they have low spreads and low swap fees. Okay. So if you have not opened your FBS account, there's also something called a cent account. I showed you, not a standard account. If you're using a standard account, you cannot DCA. You cannot hedge trade, because when you do 4 hedge trades, you don't have any margin again. For those of you who are active traders or experienced traders, you know what the margin is. If you are hedged, your margin is reducing. That means you cannot enter into more trades. But if you're using the right account, which is a cent account, you can open as many. Do you know how many trades are in my account? You can access, first of all, the smallest risk, the lowest risk possible. You can access it on the cent account. Most of you using a standard account, the lowest lot size possible on MT4 is 0.01. That's the lowest. The lowest lot size on MT4 is 0.01. And if you are using a cent account, what's going on here? Sorry, I think my network is misbehaving. Can you guys still hear me? Please type yes if you can hear me. Please type yes if you can hear me. Okay, so something is going on here. I can't access my yeah. Okay, just bear with me 1 minute. Let me fix this. Let me fix this. Okay. Okay, please let me know if you can hear me. Sorry about that. I'm not sure what happened. Please type yes. Type yes if you can hear me, please. Okay, great. I was about to show you the number of trades. I was about to show you the number of trades. Most of you can't do this because you are using a standard account. And on a standard account, 0.01 lot size is the smallest lot size you can use. 1 pip is equal to $1 on a standard account. 1 pip movement is equal to $1. So how much is your trading balance and how many trades do you think you can open? If I want to open a new trade, you can see here that the lowest I can do is 0.01. I can't do 0.001. You can see that. So how much money do you have in your? But if I do a cent account, I can still do 0.01, and 1 pip movement is 1 cent. But that doesn't limit me in any way, because I just need to add maybe 1 0 to my normal lot size. If I want to get the same amount of position sizing that I wanted to get on the standard account, so for example, 100 lot size on a cent account is equal to 1.0 on a standard account. So I just need to, scale up the lot size if I want to get the same position size. If that went over your head, it's not for you. The people I'm talking to understand. But go and open a cent account so you can have multiple. I have hundreds of trades, and I close them when they are ready to be closed. I close them when they are ready. You can see these trades are now going into profit. Can you see that? They're going into profit. Okay, so I've talked about this enough. Let's go to the strategy. So go and open that. There's a step-by-step setup instructions I gave you guys. It's in your email. Go and look for the pre-workshop instruction and follow all those step-by-steps with videos to open your account, set up the moving averages we are going to be showing now, and your statistics reporting on FX Blue. I showed you how to do everything. So that's where you look at. You look at, okay, how much did I make this month? 10%. Okay, if your monthly average is reducing, then you can check, maybe I want to increase my lot size. Do you understand? And you can manage your money that way. This is making sense so far. So let's run. Concept 3. I want to show you 4 concepts. Concept 3 is candlesticks and moving averages. Candlesticks, well, concept 2 is candlesticks and moving averages. So it's 3 concepts. When we combine candlesticks and moving averages, we're able to get about an 80% success rate on entries. That means if we say, for example, I told you now that the market is going up, due to the entry conditions that we explained to you now, 80% of the time it's going to go up. That means 20% of the time it will not go up, but we know what to do in the 20% of times that it doesn't go to our direction. We hedge, we DCA. Some trades, sometimes you will get clean trades 80% of the time. You buy and then you sell. Boom, 400 pips, 300 pips. But 20% of the time, you will have to hedge, DCA until it comes back, and then you close the entire trade in a sequence. Are you guys getting that? So what are candlesticks? Candlesticks, I mean, that's like basic FX trading knowledge, knowing your dojis, knowing your hammers, spinning tops, morning star. This is just basic Forex chart reading knowledge. I do not teach this, but I do have a beginner course, teaching fundamentals. But hey, you just go to YouTube, go to babypips.com. You will get serious, detailed, education on the candlesticks. I do not use the candlesticks to trade. We only use the candlesticks to interpret and understand what the price is doing. So from the candlesticks, I can tell you, oh, we are hitting resistance here, we are getting a rejection here, we may do this, but I do not make a trading decision based on the candlesticks. It's only one candlestick that we make trading decisions on. And this is your trading. This is one of the trading rules. Now, give me a trading rule. You can write it down. It's the doji. The doji is the only candlestick that we make a trading decision on. And basically, the doji is our exit signal. Exit, not entry, exit. So when you see a candle that looks like this, gravestone doji, long leg doji, dragonfly doji, any one of them, where the open and close price is very close. It doesn't have to be a line. It could be a body, but very small body. That's a doji. It means indecision. When we see a doji at the top of the trend is going up, like you can see here. When you see a doji at the top of the trend, we close the trade. That's a buy trade. If you're in a buy trade and you're in profit and you see a doji, what do? We close the trade in profit. If the trade is not in profit, we do not close the trade. We do not close trades in a loss. We only close trades in profit. All right. If this trade is negative, we call it a dollar cost average trade. Are you seeing that now? We're combining these things together. So doji at the top, you close your buy trades that are in profit. If you see a doji, that's what happens here. Most times, I don't know the percentage, but majority of the time, when you see a doji in an uptrend, the price is going to reverse, or at least it will retrace or correct. So you want to close that trade, and you can enter again if you're going back up. All right, but lock in your profits. If you see a doji at the bottom of the trend, for example, this is one doji here, we ignore it. This is another doji here. We ignore those dojis because gravity is most effective when you are above, when you are up. When you are coming down already, the doji is not that effective as an indecision candle. But at the top, close. Okay, so doji at the top, end of uptrend. Doji at the bottom, do nothing because we may still be going down. So let's talk about moving averages. We use 5 moving averages. These are called bankers moving averages. I've shown you all this in the pre-workshop instructions, so you can go back and use those videos to set this on your chart. I'm not going to explain how to do that here. But we have the 34 simple moving average, the 50 simple moving average, the 100 simple moving average, and the 200 simple moving average. The 34, so we use this to understand price always respects these moving averages, and we have seen that it kind of interprets what the institutions are doing, and so we are able to enter the trend early when we spot that these guys are about to move the market up or they're about to move the market down. All right, so when we get to 100 moving average is a strong support or resistance level. Most of the time, if I'm in an uptrend and I see 100 moving average, I will close my trade. If I'm in a downtrend and I hit 100 moving average, I will close my trade. So apart from the doji, I will close my trade on the 100 moving average most of the time, or at least I will take profit. If I have 0.5 lot size, I may remove 0.3 out of it and leave 0.2. Partial profit. If I get to 200 moving average, I don't want to be in a trade. For most short banker, the trade will reverse. Almost guaranteed that the trend will reverse on the 200 moving average. It's a no trade zone. I don't want to be in a trade if I'm in a 200 moving average. Again, if it's profits, I will close it. If it's not in profit, I don't care. I leave it. So I'm talking about trades that are in profit. This is trade management. So those are 4. The game changer is the 8 exponential moving average. The 8 EMA is our trigger moving average. That's the 5th one. So notice that the other ones are simple. This one is exponential. EMA, not SMA. So the 8 EMA is what we use to determine right time to enter trades or right time to exit trades. How do we use this? Now, this is where your entry signal comes in. So this is the 8 EMA, the red. The yellow is the 34 SMA. The purple is the 50 SMA. The blue is the 100 SMA. And then we have another red, thick red, which is the 200 SMA. Now, when you see a candle that comes over, crosses over like this, we call it a crossover candle. The first candle, the second candle that opens above the 8 EMA, that's a buy signal. When we have a crossover candle, we start counting. So crossover, candle 1, candle 2. The open of this second candle is when we enter. Also, you can say the close of the first candle is when you enter, because the close of the first candle is the open of the second candle. If this thing collapses, the second candle opens below, it has invalidated that entry. We must have 2 consecutive candles opening in one direction for it to be a valid signal. Are we getting that? So if you want to enter a buy trade, you enter here. But it's also a signal for exiting your short trade. If you are in a short trade coming down like that, and then you now see crossover, first candle, second candle, it's a signal for you to exit your short trade, your sell trades that is in profit. If the trade is in loss, you leave it. If it's in profit, you close it. Does that make sense? Very simple. Crossover, first candle, second candle. So the same signal that helps you to enter a trade also helps you to exit an opposite trade that is in profit. On the flip side, when the second candle opens below the 8 exponential moving average, you can enter a short trade, or you can enter a sell. That means that you can see how the price is hugging the moving average here. So we had a crossover, first candle here. This red is the second candle that opened below. So what do we do there? We sell. All right. So you can sell here, enter a short trade, or if you were in a buy trade all the way up here, this is where you would exit. Well, I would have exited here with the doji, but let's assume you are still in the trade. You can exit here as well. Isn't that simple? Enter, second candle opens above, exit when the second candle opens below. Enter a sell when the second candle opens below, exit when the second candle opens above. And when you exit a sell, is also a signal to buy, because we are following the trend. It means this trend is finished. We are now going back the other way. You just keep riding. That's why you can make 500 pips in a trade. So let's look at an example. You have to follow me on this example because I'll rush through it because I'm mindful of our time. So look at this chart here. We had a long, this is the 8 EMA. You see this red moving average that's hogging the price. So we had a long crossover candle here. Then we had the red candle, first candle that opened above. Then the second red candle that opened above. So what do we do there? We buy. We buy right there, thinking that we are going up, right? But I said 20% of the time, the price doesn't follow that. We are still going up, mind you, but they will go out. All of you that put your stop loss below previous low, they will take your stop loss and then they will go back up. So we know that's what's happening here. So no problem. When we see that the second candle has opened below, if this buy was in profit, we'll close it in profit and enter a sell. But now this buy is in negative because this sell is below. It's below the buy. You can see it. So this buy is in negative. So we enter a sell. And what kind of sell trade is that? It's a hedge trade. It's a sell hedge trade. Hedge trade means it must be the exact same amount of position size as the buy trade. If the buy trade was 0.5 lot size, your sell hedge trade must be 0.5 so that it will be balanced. You cannot enter 0.5 buy and then enter 0.3 sell. No, you can still blow the account because it will not be in equilibrium. Your buy and sell must be in equilibrium. And what do we do when we enter that sell? We wait to see what the banks want to do. And so follow the trend down until we get a crossover. You can see we got a big crossover here, this green candle, but immediately the red candle went back under. So that has canceled that setup. We wait for another crossover before we start counting. So we got a crossover here, and then we start counting 1, 2. It's like wrestling. You know wrestling, when you put someone on the floor and you hold him down. 1, 2. Before you reach 3, that one like this, they start again. You know that one has cancelled. They start fighting. That's exactly what we are doing. See crossover 1. By the time you get 2, you can make a decision. But if you don't get the second candle above, you don't close it. So when we got the second candle above, what did we do? We closed this our sell hedge. You can see that. And how many pips was that sell hedge? 251 pips. This is 4-hour chart. So this must have been like 3 days. 251 pips. We close the sell, and then we immediately enter what? A buy, because we're expecting the price to go back up. So now we are going to have one buy in negative and another buy in positive, and we have 251 pips in the bank profit. So this trade becomes a dollar cost average trade, and then this one is our new trade. So we wait. Guess what happened? The trade still went down again. And when we get a second candle below, not before, once the second candle opens, is the open we're looking at, below the ATMA, we enter another sell hedge. But now, this sell hedge has to be the same position size as buy 1 plus buy 2. So if your buy 1 was 0.5, buy 2 was 0.3 lot size, that means your sell hedge has to be 0.8. You add the two, all the buys, so that you are now what? In equilibrium. You do not have any extra drawdown. It's just equilibrium. Are you guys getting this? This will change how you trade. No matter how the price wants to go down, it's not your business. We'll follow it down. We'll follow the trend down until we get another crossover. Can you see that? So when we got this crossover, we closed the buy, the sell hedge for 30 pips. And we enter what? A third buy. So now we have 3 DCA buy trades. Buy 1, buy 2, buy 3. And we have made 301 pips in the bank while we are waiting for the trend to come back. We keep going. What did we see here? Doji. What did I tell you about Doji? If it's at the top of the trend, you exit. If it's at the bottom of the trend, you ignore it. But you could decide that, all right, I will ignore for this first buy and second buy. But this third buy that I open here, I think the doji is above it. Maybe I want to take that in profit. Or maybe not. There is no wrong decision. It's called trade management. So in this example, I left, did I leave it up? I can't remember. I think I closed the buy 3 in profit or so. All right. So I closed that buy. I closed the buy in profit of 18 pips. And then the thing went up and came down again. Second candle below. What do? I hedge again. I've made extra money with the third buy that I've closed, but I still have these 2 buys that are unhedged. They're exposed. So I hedge again, the same. I add up the lot size of this, however many buy trades I have, I will add everything up and put a sell trade, hedge. This thing goes down again. By the time, so we are just checking your phone every 4 hours. Oh, as it opened below, hedge, and go back to work. Next 4 hours, you check. As crossover come, once the crossover candle starts, you start counting. The next 4 hours, candle 1, you check again. Next 4 hours, candle 2 has opened above, fine. At this point, the second candle opened above the ATMA, but my sell hedge was negative. Are you seeing it? So what will I do? If I close the sell hedge, it will be negative trade, 37 pip loss. I can decide to take that loss since I've made 300 and something pips up till now. It's trade management. That's why I told you sometimes I'm like, make a dash. I don't want to carry that extra burden. But I can leave it because the trend will still come back down here one day. It might be next week, next month, or next year. I can leave that trade as a dollar cost average trade, and I'll still come back and close it in a profit. But I can decide to close it now and just average my profit. So we enter a fourth trade, and then you decide, okay, I want to close that in a loss or leave it open, whichever one. So let's assume we left this one open. We entered a fourth trade here. Now I saw a crossover again down, but it failed. It came back above. First candle, second candle, I bought again. Every time you see a crossover and 2 candles, you can enter again. All right. So I now have 1, 2, 3, 4 buy trades. They are called dollar cost average. Remember the example? I'm expecting the price to go up. So I just wait. And guess what? the price actually started going up. If it went down again, I would have hedged the 4 buy trades and take the profit and enter a 6th buy trade until I have enough profit to close all the sequence. The sequence is all the number of trades altogether in profit. And what made me close? Can somebody tell me why I closed this trade here? What was the exit signal here? We're done. This is the last, this is the major example. You're bringing everything together. Why do I close my trade here? Can someone tell me in the chat quickly, if you've been following? Doji at the top. Thank you, Ezekiel. Doji at the top. That's it right there. And you can see now that this trade is in profit, a small profit, about $3, 3 pips. That was it. That was that one. I had 280 pips here, 306 pips, 379 pips. Altogether, 1,267 pips. How many days was this? This was one. I'm just trying to count 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Let's assume this was 3 weeks of trading. 3 weeks. 1,000 pips. Have you made 1,000 pips in 3 weeks before, in a month or in 6 months? This is without stress. Like you are doing your work, you're just checking. As the second candle opened, no, continue your work. And this could keep going up like that before the doji came up. You can still keep going up. You can re-enter. But at this point, you've closed your trades in profit. Does that make sense, guys? I want to get some feedback. How do you guys feel? Do you feel like how do you feel? What I need some feedback at this point. I'm still going to show you guys my account. I want to show you my trading plan for the next 5 years. How do you take an account from $1,000, $500, and take it to $500,000 using this? Just, it's not even as if I say, are you a Forex trader? I don't know if I'm a Forex trader, but I'm profiting from the market. I don't want you to aspire to be a professional Forex trader. That's another full-time job. I'm not a professional Forex trader. I don't sit down in front of my chart all day. I do my trading for my phone and I check every 4 hours. 10 minutes in one day. Me, I don't need up to 10 minutes because when I open my phone in 5 seconds, in 2 seconds, you already know if the second candle has opened above. If it does not open above, you close it. If it has opened above, maybe it will take me like 30 seconds to see, okay, I want to close this trade, to check what I want to do. So maximum 1 minute, I'm done. And I go back to work. Next 4 hours, I check my phone. I spend another 1 minute, 30 seconds, 2 minutes here and there. It's mind-blowing. I'm telling you, I did not sleep the day I found this out. I did not sleep. All right. So these are some testimonies of people that have gone through just this workshop, just this 1 hour, 30 minutes workshop, 2 hours workshop. And by the way, we are done. I'm just going to show you guys the trading plan and then we'll close. You can see the guy says, I joined your class on Thursday. And I went back to my higher time frame. I've been making massive profits. And I asked him, what instrument are you trading on? He said UJ and EU. So he's not even trading gold. I recommend, he's not my student. If you're my student, you will trade gold. Why do I trade gold? Because gold gives you long trends. Gold is an emotional asset. All right. Now there's war in the Middle East. I know gold is going up. It's a store of value. So I want to make 1,000 pips in one direction. I don't want to be doing 10 pips, 5 pips, 10 pips. I don't have that time. I have 4 other businesses apart from this. I'm not even sure I consider this a business. My mentorship. I'm just helping people. I want Nigerians to see this. It will be my passion. It will be a great delight if I can help Nigerians to take hold of their finances. All right. So Einstein says, compound interest is the 8th wonder of the world. He who understands it earns it, and he who doesn't pays it. If you don't understand compound interest, you are part of somebody's compound interest plan. The only thing left after what I've shown you is understanding compound interest. So I want everybody to take down this site. So if you are writing, write this site down. The calculator site.com. So let's go there. When you are bored, I've given you a new hobby. Go to the calculator site.com and dream. You know, most of you, a lot of people come and ask me, Adequacy, I have 5 million. What can I invest in? That's in my wealth coaching life or personal finance. I have 10 million. What can I invest? I have $2,000. Invest in your own future. Invest in yourself and manage your money. Stop looking for platform 30% per month. Then you can do it 15% per month by yourself. The game changer is compound interest. So I want to show you what will happen if you put 1,000. You know, if you put it in a bank, you're getting like 4% or 5%. If you're doing that in a bank, you know, your $1,000 will only give you $51 in a year. But if you do 10% per month, which is what I'm doing, I'll show you my account. Let me show you the real chart. So you can see this FX. Anybody can go and check it. It's public. It's publicly available. All right. That's the link. So that's my account. Check it out. but that's what I'm showing you here. Can you see this? Boom, boom. This is my account balance. This is why you see this huge spike. Is when I close a sequence. So you will see my account will go straight for a long time. This is like from 3rd of August to 28th of August, almost 1 month. And then I close out all the sequences. Boom, from 2,400 to 2,890, almost $500 in that month. And then I go again. Boom, I close out the sequence. Can you see that? That is how, these are my deposits. I will explain that later, but you can see this. Can you see the monthly return? 11.6. Can you see the total return? 379. Can you see the history? If I close another sequence now, this may jump back to 13%, but I'm just showing you. So let's assume you're not doing 12%. Let's assume you are doing 10%, because I've shown you that 10% per month is doable consistently. Let's assume you do this for a year. What's going to happen? Sorry, per month. Your $1,000 becomes $3,000. You've made $2,000 on your money, managing it by yourself with what I just showed you now. You doubled your money in 8 months. But what if you extend this for 5 years using compound? You are not withdrawing this money. Well, you can withdraw, but I would rather do delayed gratification and withdraw after 4 years or 3 years. Because if you don't touch that money, guess what? Your $1,000 becomes $300,000 freaking dollars after 5 years. How much is that in Naira? About 450 million. Everybody here can do this. That is the plan. This is the breakdown. It's just mathematics. Monthly breakdown, you can check it. Just go here and be dreaming. In 12 months, this is how much I will have. If you check my account, you will realize that I'm actually on track, because it's 421 days. That's about a year. That's about 15 months. And you can see where I am in 15 months. I'm around. Okay, I'm around $3,000. So I'm still within range. All right. Is it 15 months or how many months is 400 days? 400 days to month. 13 months actually. 13 months. So I'm in 13 months. So 3,004. So you can see I'm on track. What's this? This 3,001. That's it. I started in July last year. 10% per month on average. All right. What will happen if you take my advice? This is my own advice for free. And make this your freedom project. And do some forced savings. You start with $1,000 and you commit to funding your account with $50 per month. That's what I was showing you on my account there. Are you not going to save money? You're going to save money. Force yourself. It's your future. If you deposit $50 every month, many of you can do that. Instead of 300,000, you are making 456,000. 456,000 dollars to naira. That is 700. You are those of you that will take this, I have a Discord, so we are all tracking in the Discord, and I'm showing you guys on Telegram. It's gonna happen right before your eyes. It is mathematics. It is compound interest. Many of you don't use time to your favor. The time will pass. 5 years will pass anyway. Do something that you can look back and say, Emina Moshele. All right. So I just wanted to share that with you guys. That's my personal plan. And I invite you guys on that plan. Financial freedom in 3 to 5 years. You can, if you have more time than me, I can show you how to do 20, 30% a month. If you have more time, me, I don't have that time, but you need more time to do that. And it entails scaling down to a lower time frame, but it's the same strategy. Okay. So how will you feel when you have 700 and how many million was that? 740 million in the bank. How would you feel? How would you feel? Think about it. What would you buy? This is not gimmicks. I'm showing you my live account. I don't train on demo. If you want to train with me, you will fund your account. Because I'm not charging you $1,000 to teach you this. I'm not charging, but I want you to take it seriously. And then you use a cent account. You can't even blow the account. The cent account is 1 cent per pip. So even if you make a mistake, you will know how to hedge. You know how to DCA. You will learn with that, and then you will scale. You will begin to scale your lot sizes as you gain experience. Who will you help when you have 700 million? Breathing is breathing in your account, your dollar account, not naira, dollar account. Because they're telling us that naira is going to $4,000. I don't know yet. Sorry, that dollar is going to 4,000 naira. All right. So who feels like this right now? Who feels like this? I told you guys to brace up. I was going to hit you with a ton of value. Who feels like this? It's like brain reset, right? So have realistic expectations. 10% per month. Most forex traders can even do that. Just that they are too greedy and they don't have a plan. I just showed you something. You can zoom out and have a freedom account. You may have your other account that you're doing your normal trading, but have this account that you are growing. You don't have an option, what I'm telling you. What's your other option? Where do you want to get? Where do you want to save your money above inflation? Traditional vehicles can't do it. This one, you can do 10% a month or 15 or 20 if you have time, or even 5. I have people doing 5% a month. They have serious money, $50,000 in their account. They are okay with 5% a month, 60% a year. Compounded, that's like 70 or 80%. Always understand there's going to be a drawdown at the beginning. And this drawdown, when you are learning, you are going to accumulate a little bit of drawdown. When you are paying for mentorship, I look at that as drawdown. It's not a loss. It's an investment. It's operating capital. You cannot access this wisdom on the streets. You either have to learn it by experience, trial and error, or learn it from somebody who has the wisdom and can mentor you. And then at some point, your expenses are flat because you've paid for the mentorship, or you have learned, you've paid for the course, or you have put in the time. Those are expenses. Is non-negotiable. And then what will happen is compound interest from the 4th or 5th year begins to go. If you take that into 7 years, you won't even believe what we are going to be looking at. So before we go, I want to invite you guys. First of all, this is my second. I decided not to teach Forex for a long time because I didn't want to get into this there's a way the Forex industry is, the reputation wise, everybody thinking you are out there to take their money. So I just decided not to teach trading, and people have been begging me. And then I decided last year, you know what, you need to start teaching people this thing. I mean, posterity will not forgive you if you don't share this knowledge, basically. And that's why I'm doing it. I don't need to do this. I don't need to do this training. I don't need to do the course. I've shown you my accounts. I'm trading my money. I have my other businesses. I'm fine. Early this year, I spent 6 months not doing any business, like no income, no new income from my own active work, my consulting, coaching, no new income. I could do that because I'm sorted. I'm good. Can you say the same thing? All right. So take this down. If you want to register for this event, it's free, by the way. It's free. It's going to be 26th October in Ibis Hotel. It's a live event. We're going to have FBS there as well. And there's going to be at Ibis Hotel in Ikeja. If you're not in Lagos, you can fly down, enter bus, whichever we get there. But you have to register. And that's the registration link in the comment section. All right. So I want to give a few people opportunity to work with me on a closer range. Okay, what I've shown you now, you can actually go and figure out how to make it work. But why would you like to learn from your own experience and mistakes when you can shorten the time frame? Why would you want to take months, to figure it out when you can learn it in days? So I want to create an offer that you cannot refuse. No, I'm not going to live stream it. I think you should try and make it down to Lagos. The last time I did this seminar was November last year. I don't do physical events. I don't do physical training. I do not do one-on-one training. You will not be able to afford it. That's just the truth. My personal finance training, my coaching is $5,000. That's not trading, no. My normal wealth coaching is $5,000. So if I'm going to train you one-on-one, I'm not going to achieve what I want to achieve. I want to help people. So I have to do it in group, and that's why I have the Discord. All right. So what I've done is I've created all the strategy videos, what I went through today, step by step. I've broken them down into different modules, step 1, step 2, step 3, and then it's called the Smart Money Masterclass. It's a 5-hour self-paced course that you can follow to learn, and you have it for a lifetime. So again, you will learn how to read a chart, how to know where the price is going. That's what I'm teaching you. I'm not teaching you candlesticks. You can go and learn candlesticks for free. By the way, I give you a free course if you are new. I have a free beginner course, Trading Fundamentals. Some of you who are already trading and struggling, you need to brush up on the fundamentals. How to hedge trade, how to trade without a stop loss, how to trade without a take profit, how to make 200 to 400 pips per trade. This is worth 500K. I will pay 500K for this without sweating. Without blinking. I've paid much more for things that were not going to make me financially free. But I'm adding a fast action bonus for my workshop group. That's if you're watching this either live or whichever way, I'm going to give you lifetime access to my inner circle mentorship in addition to the course. All right, you will have a community of like-minded people, lifetime access to me. We trade on a daily basis. You take a screenshot of your chart, put it there, and tell, this is what I think. Am I correct? I'm not going to tell you. I don't give signals. I'm mentoring. So I will ask you what you think, and I will correct you. I will point you to the video to go and watch and brush up. We have weekly Q&A, technical support. If you have issues with your account, anything that has to do with broker, platform, trading account related, we have 24/7 access. That one is done deal. But I'm also going to add some advanced concepts. On the course, I did not cover this. All right, there are some advanced modules there. Retail sentiment. We are doing institutional trading. So retail sentiment there are some indicators we look at to know what the Bugboero are doing, the head mentality, what they are doing. And then we know that the institutions are going to go the opposite way, because it's always like that. So if you know where the crowd is going, then you know to adjust your direction that, okay, this is actually where we are going to go. So how do you use retail sentiment in trading? I'm going to teach you how to use COT data. COT data is commitment of traders data. The financial institutions are obligated, they are legally constrained, they must publish their weekly positions of all their assets every Friday. I think it's 4 p.m. Either 4 p.m. GMT or something like that. I think it's 4 p.m. GMT or 5 p.m. GMT. Every Friday, they must publish it. So we go there, we look at this data, and we can check, we can see exactly what they are doing. Are they buying gold? Are they selling gold? Have they reduced their position? Are they increasing their position? And are they increasing it fast? So we know exactly where the market is going just from watching. This is like Expo. This is like Expo. It gives you brand new goggles. So we use that in our trading. That's why I can tell you that gold is long. I've given you guys free gist. Gold is crazy long. All right, just from COT data. Okay, so retail sentiment, COT data. I'm going to teach you Bill Williams fractals. All these things are in the course, recorded videos. You can watch it at your own pace. Bill Williams fractals will show you how to enter into, to scale into trades. How to, we are going long, you've entered already. You can add to your trades with Bill Williams fractals. You can take partial profits with Bill Williams fractals. And then we'll talk about institutional order flow theory and some other smart money concepts to refine our entries. So that remaining 20% that we say is always, it may go against you. You can actually refine your entries and take fewer trades, but be more like a sniper. Okay, so this is what 297. The total value is 991, but I'm only giving you guys at 100K, and that's the value. Lifetime access to everything, and the Discord mentorship. But I'm giving you guys an extra discount for those of you watching this workshop. If you want to pay with your card, go to seller.co. I put a link in the description or in the comments, or you can make a transfer. So I'm taking an extra 50K off. I don't want to give you an excuse. I don't want you to not be able to do this if you are really serious. All right. I don't know how much was in your last account that you blew. I don't know how much you are in drawdown right now. But if you can pay 50K to get lifetime access to not just the course material, but to me, to my community of inner circle traders, the community, the mentorship, just the fact that you have people that you are on this journey with is worth that. Just the fact that you know that you can never blow an account again forever, I think it's a no-brainer. All right. So I don't know who's joining us tonight. You can go ahead and make your transfer now if you want. I'm keeping this open till Sunday, or the first 10 people. First 10 people that take this on the call, we're a couple of people, a good number of people here, or till Sunday midnight, whichever comes first. You're gonna have that's the offer I'm giving. So please, after Sunday, we're going back to 100K. All right, first 10 or 50 or Sunday midnight, whichever comes first. So question as we wrap up: have you stopped blowing accounts? You know, Nigerians, we are not honest with ourselves. We do not like to be honest with ourselves. Just think about it. Have you ever made 300 pips profit? I showed you how to make 1,260 pips in a week. Are you set to be financially free in the next 3 to 5 years? If you answered no to any of these questions, go and pay 50K and get the course. All right. So we're going to end it there. Thank you so much for joining. You are paying 50K to potentially make 600 to 700 million in 5 years. And you guys are all on my email list. If you registered, some of you can join my Discord for free. You are going to see me do this right in front of you. This is just my Forex account. I have not my other investments, but I want to show you guys that it's possible, and we can do it together, or you can watch me do it. You can watch me and my guys do it, on the Discord, or you can join us, whichever one you want. So we're going to end there for now. If there are any questions, I would like to take them in the next 2 minutes. Any questions? I didn't see you guys post questions in the chat about the training, but I believe it was very clear. I spent longer than I usually do. Temitope, you will get my YouTube channel. Just join the Discord. I put all my details out there. Father Yomi Precious says, I think one can trade without unnecessary pressure. I'm telling you, it's like 99% of the pressure is off, or even 100%. Ezekiel says, I'm just wild. So I want to know who is paying. Maybe I should give some. Who's joining us? Tonight? Who's joining us tonight? If whoever joins us tonight, I'm going to give you some freebies. I have some FBS merch. I have some FBS merchandise that I'm going to give out. I think I'm wearing one. Trader's going to trade. All right. So if you guys come for my event, I'm also going to give you. You're going to get this merchandise. So go and buy the course. So I'm giving you guys some free merchandise. Peter, yeah, go and buy the course. I'll post the link again. All right. So thank you so much. I have to go now. It's been a great time. I hope you enjoyed the training. I hope you learned something. Go and practice it. Go and create your accounts, and definitely go and buy the Smart Money masterclass. Also, register for the live event on 26th of April. Is about 2 weeks, a little over 2 weeks away, on Saturday in Ikeja, and I will give you more details in the Discord. I'll be there live with my guys, and we're gonna have a blast. All right. So take care. Thank you so much for joining. Go and get your course, and I'll see you in the inner circle on Discord. Thank you so much. Have a great night, and God bless.